It's taking.
Hi. Welcome to our show today. It's going to be, I feel like a talking head. I can see that my head's just kind of cut off. You haven't gotten to the wrong place. We're just in a different spot today. We're all in different places. Bill is luxury vacationing in Florida, and Jonathan's going to join me as soon as we come back right after this. There he is. How you doing, Jonathan?
I'm great. A little
Awesome.
shuffle today, but not too bad.
Yeah, we're shuffling offices, cameras not working, all kinds of things happen, but that's the beauty of live TV.
We're here. We made it.
Yeah, right. Live recording. So you are on the passive aggressive show.
The Real Estate Investor Show, hard money for real estate investors.
That's right. And if you are interested in doing some hard money, borrowing some hard money, you can go to carolinahardmoney.com. Click on the Apply Now tab if you are an accredited investor and you would like to learn about putting money into our fund. You can go to that same website, carolinahardmoney.com, and click on the accredited investor tab. Don't forget to like, share, and subscribe. And of course, hit that bell. And now we are also on Rumble.
Are we?
So we are super cool now that we're on Rumble, right?
That's right. And also, don't forget about Wednesday with Wendy. Every that ink is what your mind will do when you
Yeah.
and talk about real estate and all the different ways that you can invest and work things out. So she's got 20 plus years of experience in this. It's a great time, and you are booked probably a couple months out, aren't you?
I'm booked through the middle of June at this point. And the summer's going to be tough because I'm doing a lot of traveling. So I don't have a lot of times open in the summer. But I'll tell you what, I get so much out of it. It's amazing what I learn every Wednesday, no matter who I'm talking to. Somebody's bringing a nugget to the table, and it's pretty awesome.
Yeah. The quick question from Eric over here: what's an accredited investor? So that's a great question. It's defined by $1 million net worth of an individual, married or single, excluding their primary residence, or if you're single, you've made $200,000 the last 2 years, and you project to continue making that. If you're married, it's $300,000 for the last 2 years, and you project to continue making that. Also, there's some designations. If you're a CPA, a fund manager, there's a few other
financial advisor,
some titles and licenses you can hold that will allow you to be accredited as well.
Yeah, that is a great question, and we do have options that I think would interest a lot of people. So it's definitely worth the read, right?
Mm-hmm. Yep.
Awesome.
For sure.
So there's a couple of things we were gonna really talk about today, and it's the timing I think is really, really good about a video that you were on yesterday, actually a webinar, I guess, talking about the market. Everybody wants to know what's going on in the market. And gosh, I wish we knew. The best thing we can do is really take into account all the different crazy things that are going on right now. In one of our in our fit group call Tuesday for Freedom Founders, we were talking about just how odd everything is right now with interest rates rising. They're the highest they've been in 20 years. And in fact, I just looked it up before we got on here. Back in 1981, they got up to 18.63 at one point. Didn't stay there long, but it did get up that high. The rising inflation rate is another crazy thing right now. We're at a 41-year high right now, and we expect that to continue. And a pending recession that I think everybody on earth agrees we're going to be entering pretty quickly.
Yeah, and the recession is like, it's like, we know everyone. I think there was a poll taken that 80-some% of people believe we're going to be in a recession within the next 2 years, and 50% think within 1 year. I can tell you, like Fannie and Freddie, Fannie's already hedging for recession. They've already, downgraded their projections for loans originated in 2023. They've brought that. I think they brought it down from like 2.7 to 2.4 trillion, something like that. And just for perspective, they did 4.5 trillion in 2021.
Big numbers, big numbers. I actually sent Sharub a chart on the mortgage rates. I thought this was kind of interesting. Starts in 1971. I mean, there it goes up to the little over 18%. Isn't that crazy? And people were still investing and making money, even at, over 18% interest rates. This particular chart, stopped a year ago. But we're still not up as high as what the average is, which they're saying the average is really 7.78 since 1971. So I thought that was interesting.
Mm-hmm. Yeah. And that is, I mean, that's the thing, we can go ahead and take that down if you don't mind. That's the thing. Interest rates are rising, but there's still opportunities out there. It's just being savvy to know how to buy. It's not so much when to buy, it is how to buy. And that's what people need to understand. Even when rising rates, and like you said, at 18%, deals were still being had. So it's, how do you buy?
Right. Mm-hmm. So one of the other things that we were talking about in that FIT meeting is, how do you, as an investor, how do you make yourself how do you have the ability to keep floating while this is going on? If you're a one-trick pony, what are you doing to alleviate that? And one of the things that we were talking about as a lender, we do short-term fix and flip loans. That's, been our bread and butter for years. And actually the short-term fix and flip for single 1 to 4 family units actually has dropped a little bit, not because there's a lot of competition out there, which there is, but really because it's so hard for people to find those deals. But what's been helping us is those short-term commercial deals that we've been able to lift up on the other end. So,
and just to clarify, commercial for us means multifamily or storage facilities. We are not doing, we're not going out there lending on office space. Typically, we have done 1 or 2 loans like that, but typically it's going to be multifamily and storage that we're talking about when we say commercial.
And what's amazing is that people are still building office space, isn't it?
Well, they're anticipating, everyone coming back to work, which, has already happened a little bit. But yeah, there's people who are, hedging that, hey, companies and people want to get back to the office.
Right. So as a real estate investor, if you're, wanting to get through these times as they quickly change, you have to be able to make some changes and make sure you've got other streams of income or other niches that you can hit while your current niche may drop off a little bit. Did you guys talk about that yesterday in that webinar?
Yeah, I mean, it's multiple revenue streams is definitely one, but the whole reason and premise behind the conversation that we were having yesterday was to help everyone explain, from the borrower to the lender to the aggregator to the bond market, Wall Street. What is everyone's perspective, and what are we seeing specifically in term loans? When I say term loans, it's 30-year investor loans on single family properties. So just trying to get, voice from the boots on the ground, on the streets and the properties, all the way down to where they end up. So it's, wish we could, predict things, but we're kind of in this moving market. And one of the things we want to stress is, like, the capital market side. When I say capital markets, that is the investor loan side that we're doing, is not necessary. I guess borrowers would say, well, it's not, it's not tied to the interest rate of the market, or like the government rates or the Fed rates or anything like that. And it's like, it is. I know that, the regulation isn't tied. However, where is capital being sourced? It's being sourced all from the same place, whether it's going to a Freddie loan or whether it's going to a lender like us that is lending on a term loan. That money is still being sourced ultimately from the same place. It just takes different avenues.
Right.
So, what affects one does affect the other. So
right.
For everyone to understand that. So that's why we have seen roughly, I'd say 200 basis points or 2% increase in the last 4 months for interest rates on term loans. Will that slow down? In short, no. I don't anticipate it to. I don't think anyone in the market really does. We're anticipating, the average mortgage, conventional mortgage rate to probably be over 6 to 6.5 by the end of the year. Right now it's a little over 5. So as that increases, you can expect that term loans will increase as well. And then we hit that, like, where's that threshold of at what point did you buy a property 6 months ago, 12 months ago, 24 months ago, whatever it was, 3 months ago even, and you bought it under the market conditions of that time. And at what point do the interest rates rise enough to where it doesn't make sense for you to place that on a term loan? I think the best guidance that I can give anyone right now is probably somewhere between probably 7.3 to 8%, somewhere in there, where it starts outpacing inflation. That might not make as much sense as before. But again, you just have to reshape. It's the how you buy, not when you buy. So when you're looking at properties, especially term, that you want to sit on term loans, like, follow the 1% rule every time. Make sure that rent that you can get is 1% of what you have, 1% per month of what you have in the property total. So if you're buying the property for $75,000 and you got to put $25,000 in it, you better be getting $1,000 of rent on that per month. Like, you better be. Otherwise, the margins may not make sense for you when you move to a term loan that could be at 7 or 7.5 or 8%.
Right.
Just kind of get out in front of it.
So what I think is really interesting about all of this is we've got that huge unknown of really such a shortage of housing that hasn't changed, and it's not going to change for a very long time. So how does that really affect, the whole recession thing? The whole inflation thing, how's that really going to affect everything? Because there's still a need. Housing is a need. It's not just a want. It's a need. How will that affect it? cities, many cities, especially, like the Charlotte area where we are near, and Rock Hill where we are located, cities haven't really been opening up new living opportunities for true affordable housing. They really haven't. So, what's going to happen? Where are people going to go? What are they going to do?
Yeah, one of the big issues that we're seeing that's, because we're all expecting a recession to happen. Will it be severe? Will it be like 2007 through 9? No, it most likely will not be. But like, what's going on, and what we're seeing is with these crazy prices in real estate, or the higher prices, crazy might not be the right word, the higher prices in real estate.
They're actually normal.
Yeah. That we see a lot of baby boomers are opting to not downsize.
Right.
They're opting to stay in their larger home because it's just as expensive or more expensive to downsize, or they can't find something to downsize into.
Right.
So what does that mean? That means all the millennials coming up who are looking for homes to start that family, to have that bigger home, there's no inventory available.
Right. And
they can't build it fast enough because we have supply chain issues. We have, all kinds of other issues as well. So yeah, I mean, that factor right there will keep the housing market bolstered up for a while, but at some point it's going to turn. It's just when does rising rates bring housing affordability back down, or does wage growth go up? I mean, everyone's most Americans' balance sheet looks better than it did in 2007.
Right.
So there's no problem there. It's what that factor of baby boomers not downsizing is keeping the housing market bolstered up right now. However, there is some decline in it. We also saw where, I think maybe it was Zillow or somebody, they brought down their projections by 2.5% or something like that, what they thought. I think they brought it down from like 16 to 14% on appreciation in homes this year. I think that trend will continue every quarter to be brought down.
Yeah.
And I think we, if we put a prediction on it, I think probably Q2, Q3, 2023 is probably where we're going to start feeling that recession.
Yeah. What else I'm seeing a lot of an increase is the communal housing market. I'm seeing that explode. I know so many people that are really getting into that, where they're, they might be taking a 3 or 4 bedroom house, and if it has a garage, they'll turn that into a living suite as well, where they're doing shared kitchens, a shared den, but they turn those bedrooms into, where they're renting them individually. I'm seeing that everywhere, and they're nice. I have one friend that's doing this, and he's getting $1,100 and $1,200 a room. That's pretty amazing.
Yeah. Well, that's also one of the factors that's, an indicator for a recession is the rent right now, as opposed to the wages of the Americans is way out of proportion from, where it typically is. So that's another indicator of a recession coming, because, the affordability, even on the rental side, is not there.
Yeah. Well, you can get $15 an hour to flip a hamburger these days.
Hey, whatever, I wish they paid that when I was.
I know. I did actually flip hamburgers when I was a teenager. When I was 16, I made $2.10 an hour, and I was thrilled to get it.
I was cutting grass and weed eating for $5 an hour.
That's good pay, but you're half my age, so of course that's about right. Of course, my tooth fairy was $0.25 too.
Oh, nice.
So that'll give you a lot to measure by. That's too funny. So a couple of things we wanted to mention is Quest Expo that's coming up in September. There's some information in it on the chat box beside us. And I think we have a video on the Quest Expert. This event is awesome. We have been to it several times, and we always set up a booth there. If you want to sign up for it, you can get a 30% discount by going to the Quest Expo URL, which is questexpo.com. And then if you type in that Fairman 30, you'll get a 30% discount on it. But the information there is mind blowing. There'll probably be 1,000 people there easily.
Oh yeah, the speakers there are just top notch.
They really are, and it's a great opportunity to really not only network, and learn about self-directed IRA stuff, but also to learn about other types of investing. So especially if you have any self-directed money, whether it's in a 401k, an IRA, Roth, traditional, whatever, HSA, ESA, all of those, you need to learn what you should invest in. And this expo is set up with all kinds of people that have really good options, solid options for you to invest your money. But they'll be talking about the market there as well, all the things that are going on.
Oh yeah.
So it's well worth it. There's another event that I'm speaking at in Punta Gorda, Florida. It's a mobile home, how to really put mobile homes on land, and I'm going to be talking a lot about the financing end. So there's the link there, Punta Gorda 2022. That's in June. Look at that, you get 75% off if you put Punta Gorda 2022 as your code. Can't beat that. It's going to be 3 days. There's a lot of good information that'll be there on that, because mobile homes, even though supplies are tough, they're getting easier and easier to order and get in. And it's a great quick way to get affordable housing set up and running. But Glenn, we were talking to him on the Fit group, Glenn Stromberg, the mobile home guru dude. He was, and he'll be speaking at this event too, but he told us on Tuesday that there are mobile homes in Texas that are selling for $250,000 on land. Isn't that amazing? He said stuff he could get for $60,000 5 years ago is selling for, $250,000 plus. It's just crazy.
It's crazy, but I mean, that's where affordability is now. And people
right.
to get into schools or to have a place to stay. I mean, it's the cost of entry now. And, it's, like I said, I don't see it going down for a while. I wanted to also talk about foreclosures, if you want to talk about some.
Absolutely. Go ahead.
Yeah. So foreclosures are on the rise. Still way below the average. And they will continue to rise month over month for this year. I think, we think that probably going to hit normal averages for foreclosures close to the end of this year, which will open up opportunities for investors on fix and flip and other arenas. So inventory is coming. Of course, your larger states are leading the way. California, New York, Texas, and Florida are the top 4 states with the foreclosures moving through in the numbers. And so if you're in Florida, Texas, California, New York, there's going to be a lot of opportunities coming through in the next few months, already coming through. I think California in the Q1 had like almost 8,000 foreclosures come through.
Wow.
So yeah, so it's starting to get back to the flow of, because the moratorium just stalled everything. Like we're experiencing that in Oregon. I mean, we have a foreclosure. It's like it feels like you can't even get off the ground in Oregon.
Yeah, that's over a year behind, right?
Oh yeah. I mean, well, the moratorium in Oregon didn't end until December 31st, 2021. So that was just, less than 5 months ago.
Yeah, and we've been in line for a while on that one.
Yeah,
it's crazy.
Yeah, so just keep your your ear to the ground. Make sure you're buying well. When we say buy, like you make all your money when you buy the property or when you buy the asset. So don't give up margin to try to be competitive, because you don't know what's going to happen tomorrow.
That's right.
Interest rates can rise. May 6th, look out for May 6th. I mean, the Fed's going to raise the rates on May 6th, probably 50 basis points. I mean, that's realistic. I mean, most, there's a lot of people like, is it 25? Is it 50? Could it be 75? It's probably going to be 50. Like I think everyone's anticipating 50 basis point rise on the Fed.
Yeah. And that for in layman's terms is a half point.
Half point.
A half a percentage point, just in case you're wondering. And what's really interesting is while they're raising rates, we're coming up with programs where we can actually drop ours, right? And make them a little bit lower.
Correct. Yeah. So we are kicking off a program. You want me to talk about it, Wendy?
Yeah. Yeah.
Okay. We're kicking off a program where we have our normal lending. So this is the lending side for
short-term fix and flip.
Yeah, fix and flip, new construction, stuff like that. We do 90% of the purchase and 100% of the rehab, and that's at 10.99% interest only. We just opened up 2 other programs where we capped the loan to cost at 90%, and we can do those loans at 9.99. And then we have another program where we cap the loan to cost at 85%, and that's at 8.99. So we have found ways to get down to the 8s. If you want to lower rate, we can definitely help you with that.
And then we have the long-term 30-year mortgages as well.
Yeah, the term and the best guidance that we're giving everyone for rates on that, it's the 5-year Treasury plus 350 basis points or 3.5%. Which I think right now should be somewhere around 6.3, 6.4, something like that.
Yeah.
So you can expect, rates somewhere in that range on our long term. And again, those are dependent on loan to value, loan to cost, credit score, whether it's a refinance, cash out, or purchase.
Right.
So there are other, considerations in there.
Awesome. And you too can learn more about that if you are interested in getting any sort of a hard money short-term loan or a long-term investor loan. You can go to carolinahardmoney.com and click on the Apply Now tab. Plus, we have some videos up that you can watch. In addition, if you are an investor, an accredited investor, you can go to carolinahardmoney.com and click on the accredited investor tab and learn more about our fund and what we do there. Don't forget to sign up with Wednesdays with Wendy. Make sure that you like, share, subscribe, and hit the bell. Thank you for putting that up there because I lost my train of thought. And thanks so much, y'all, for spending this half hour with us. We love telling you what we hear because this is what it's all about is sharing the brain trust. We have to lift each other up and encourage each other and share what we know. So we're all in a safety zone, right?
Absolutely. And if we didn't cover something, if you have a question that you want to know or whatever it is, just email us or put it in the chat and they will get it to us and we will do our best to answer it.
That'd be awesome. Awesome. All right. Thanks so much, folks, for spending this time with us. And we will see you next week.